Hey everyone, welcome back to another video. So yeah, I know it's been too long. I recorded a video. I didn't give any updates. So I'm back again to YouTube. So this time I'm gonna be pretty consistent about trading, and I'm gonna share a lot about my journey and the stuff I trade. So from now we're gonna build some good value on this channel, and I'm gonna provide as much as I can. And let's start this video. So today we're going to talk about entries and how can you take good entries, and how can you take continuations, reversals. We're going to talk about, and like we're not going to talk about continuation and reversal. So maybe I'm not going to teach. I'm going to tell you something like which can help you to improve your entries, and regarding what you have problems regarding entry in trading. So we're going to discuss that. And okay, before moving to the video, I'm going to tell you about that entry is the second most important thing. First thing that matters in trading is direction. You must know about your direction, where you want to take trade. Let's suppose we're in a downtrend, oh sorry, uptrend, but you are shorting here, here, here. That doesn't mean like how many conferences you will see to short here. Like let's suppose you're shorting the uptrend and you just see a pattern here. So yeah, let's suppose this is the high time frame trend and you just waited for some 1 minute confirmation that market shift to bearish. I will short here, but instantly market turns out bullish and you got stopped out here. So the problem is you need to first have a direction. Without a proper direction, the entry pattern or how many conferences you're going to use, that doesn't matter. Okay, so first thing is important is direction. Second is entry pattern. So for entry pattern, there are thousands of things to enter. Like many people use market structure shift. They shift and like structure shift. They will see FVG or something in this leg and then enter here. Like this is the pretty common entry pattern used right now in the market. Uh, but this is little risky for me. I don't use this pattern. For me, I need some confirmation. Like I wait for a leg down, then I wait for it to like retest here, then I should took a short entry. This is my entry pattern. Okay, you see, entry pattern is the least important thing. The most important thing if in trading is the direction. You cannot take a trade without knowing the direction. See, blindly following any trading pattern is just a waste of time, energy, and money. Cause see, this is the without direction, you are just trading like a pattern blindly, and it doesn't helps you to make money in this market. Cause we need a buy or sell direction. Like we are not gonna sell in the middle of the move. See, like if you see there is a structure here, okay, like small structure here, but we are in a downtrend. Okay, so if you are longing here in the middle of this downtrend, that doesn't make sense. Okay, so for that you need a direction. Suppose this is the market. Okay, see, this is the simple. Okay, I'm taking the simple example. You can see market is going up here. It is the uptrend, and you see a direction like structure shift here, and this is some like most of the common trading used trading pattern here. This is a sweep of a high. We see some high build, we wait for a structure shift, then we trade at OB. So yeah, this is a simple trading pattern that is used nowadays. And so we got stopped out here. Cost direction was uptrend. So yeah, trading against the trend is the major problem people see, and entry pattern is the second thing you need, because entry pattern is just a pattern that repeats in the market, and you can see that trend against a trend. And trading against a trend means you are biting your own hand. That doesn't like head you. Okay, so let me remove all these drawings. Oh sorry, need to remove this. Yes. Okay. So for entries, yeah, we're going to discuss about entries. So For entries, what I see, my basic entry pattern you can say is like if we are going in a downtrend, okay, and for example, if I want to short this downtrend, okay, I will not short here. I need the move extreme of the move, okay. I will wait for OBs to form here and like POIs to wait, like mitigate that POI, then I short here. So first of all, I need a direction, then I need extreme entries. Extreme entries, and you don't need to short in the middle of the move. Let's suppose you missed the entry here and that trade is going in your direction. That doesn't mean you will just enter in the middle and just take some profits. That for me, that thing doesn't work for me, but some for someone it may works. But you can see your journal and how it works for you. It depends on your data. Like for me, I'm not comfortable in this. So yeah, we are in this, and let's suppose this is the downtrend. I will just create extreme POIs. That is this. So how I trade up on a POI? Let's suppose this is old range POI, and let's suppose this is whole a zone, and this is extreme order block, and price came here. So we got a shift here. That doesn't mean you're gonna enter here, okay? And price start falling. Maybe this can happen. Like this is for me, this is not a good entry pattern. For me, it's a B type entry pattern. Okay, let's just type B type. Okay, for A type entry pattern, I use like if you see a trend, a reversal that is gonna happen on a POI. I want a structure shift and a continuation in the structure. Okay, that means that that higher is gonna be protected and low is gonna sweep. I mean low is gonna be break. So this is the simple structure mapping, and if you use order flow footprint charts, you can see expect that those buyers that are here, they gonna buy, but they're not gonna find any value above here. So yeah, they are longing here, but price doesn't going up. So that means those all buyers here, they are gonna like absorb here, and delta gonna shift, and we're gonna start moving down. So yeah, this is a different concept of order flow, but in simple trading condition, in simple candlestick trading, you can see the POIs here that gonna respect here, price may come here and beautifully reject here. So this is the entry pattern which I use personally from a long time, and this thing works for me. I've been using in gold from long time, and yeah, it works good. So this is example of Friday only, and wait, I mark the Friday. Yeah, sorry. Yeah, here is the Friday, and I shorted here. Now I tell you how I shorted this leg. Okay, so I traded that. My trade was in New York. So we see a price rejected here from this extreme BOI, and we stripped this high. So this was a good POI. We got extreme of the move. You can see this was the extreme of the move. There is no middle zone side marked here. I just wait for the extreme of the move, and this is extreme of the move. Price come here. We saw rejection here. Okay, so I didn't short it here, not here. My short was here. I waited for price to again come to some zone. So this was my POI here. Okay, why I'm shorting here? Wait, we're gonna discuss that also here. Okay, this is the 2-day composite value, I guess. Tuesday and Wednesday. Yeah, this is the Wednesday and Tuesday composite value. So if you see, we got a composite value area high here and composite value area low here. So I extended this range, and price just opened here and got accepted in this range. So like if price accepts in a range, that means we're gonna stay in range only and price will be balanced. So this was the first key here. Second, it got rejection from the 2-day composite value area high. So this was one of the factors. Second, we got in a balanced area. So simple principle about balanced area is like price gonna consolidate here, but I trade extremes in the balanced area, so I got a good trade there, and that was a good reason. Second, we got Friday also market closing, so there was no good reason to hold a long trade, like not a long trade, like holding a good trade, like good RR trade. So I just kept this trade into a small scalp, and we pretty much managed to take a good piece here. So yeah, so you got it why I shorted here. There was a value area high at 3656. Okay, I marked that value area high 36 and 56. Okay, this was the 2-day composite value area high. We rejected from here. So in this zone I marked out here. This was my zone of short to short here, and my plan was bearish, and there was a range, also small range, so I was just targeting this low. We didn't tap this TP full TP, but I got trade stop loss, which is good, like in this market condition of balanced price action. Yeah, that is good. And first of all, you can see price went from balanced price action to imbalance. It broke this, and this is pure imbalance market here. So we got impulsive move here, then again we are back in balanced market. I have covered a video here. So market just moves from imbalance to balance. Now if price broke here, we again imbalance and come into this balance zone. So yeah, this is a different concept. I don't come into this concept right now, but we're going to discuss what happened on Friday. So it is a little about entry pattern plus a trade review also you can expect. So if I go to 1 minute time frame, so if you see there was a structure shift here. Okay, sorry, let I mark properly here. But if I enter here, I got immediate stopped out. See, that is thing I'm trying to say, that alone depending on market structure is not the key. You need some trend shift. Okay, how like if you use order flow, you can simply check out the delta here, and delta is going good, and continue delta going down plus market also going down. That's a good signature. But if you're using candlestick, okay, then wait for price action to become bearish. How you can wait for a price action to become bearish? Wait for some structure shift and follow up of structure, then again continuation in that trend. Okay, so yeah, like if I want to take a short, so we are coming from a uptrend, and here uptrend stops. So at this point, if it breaks higher high, I'm not going to take trade. Yeah, if it breaks lower low then coming down, then I will prefer a trade here. Okay, so let I remove all this, and my exit entry, I'm checking my MT5 here. So yeah, it was at 3649.96. So I waited for a trend change in trend. So this was the basic change in trend here, and when I see rejection from this zone here, I shorted at 3949.96. Yeah, after this candle closure I shorted, and stop was above the high. So like if it supports here and closes above high, so that means this trade is invalidated. My short idea is invalidated. I'm just done with that trade, and I'm gonna move on to next idea and next POI if I have, or I will wait for next day to come up and take that trade. So you have to like if you are entering a trade, before entering any trade you have to make an exit plan. So yeah, if the trade goes in my favor, I'm gonna close my setup and just take whatever market gives me. So yeah, if trade goes against me, I'm just taking this trade, or if I have another POI or another setup will form, I will take it. You have to take this notes of that. Before entering the market you have to make the exit plan, so you don't like get uh, what to say. So yeah, if you make an exit plan before entering any trade, you just don't fumbles when the trade goes wrong, ideas goes wrong and it doesn't goes in your favor. So you don't panic about that thing, that this trade is going against me, I'm gonna pass trade in one account, like this account in one trade. So this is the most thing that people would do wrong right now. They just plan a trade and goes all in. That is not the way. You have to take measures, like you have to face the losses also. You have to make plan for losses also, otherwise you're not gonna survive here. So for me, I just planned when I shorted, if this lower low doesn't break, it start looking higher, high, higher, high. I just take a stop here, and I just done for a day. I'm not gonna take any trade anymore. But luckily, it went in my favor, and I started partially here. I took out some small lot here, then POI was here. I exited there. Then after that, I managed my position. I trailed my stop loss above this high, and this see how much point it was to from. Okay, 0.63 points away from TP and it reversed. So yeah, you have to ready your mind to worst case scenario that can happen in a trade. So in trading, you cannot win every setup. You have to just make your mind so peaceful that you can handle stop loss. And these are all cost of the business. And that's it for this video. I hope you understand how to take good entries and how to manage those entries and how to scale up. You can like scale up here and add more quantity here, but I'm not personally a big fan of that thing. Like I'm not confident in that thing, so I just take the main trade and let it go whatever result it gives. So yeah, that's my trading plan and everything I covered in this video. And more videos gonna be coming on this channel, and I hope so that I provide value to your trading. And yeah, that's it for this video. I will meet you in another video, so peace out.